180 million ADA tokens, bought in 48 hours, by crypto whales who clearly know something we don't. While retail investors were panicking about daily price dips, institutional money was quietly loading their bags with Cardano at these levels. And when you see the technical analysis I'm about to show you, combined with the regulatory tailwinds and ETF developments, you'll understand why smart money is positioning for what could be ADA's biggest move yet. I'm about to break down why this whale accumulation pattern, the exact same one we saw before major breakouts in Bitcoin and Ethereum, might be signaling Cardano's path to double digits. Stay with me because by the end of this video you'll have a complete roadmap of ADA's next potential price targets. Alright, let's dive into the data that has the entire Cardano community talking. According to @Ali_charts, one of the most reliable on-chain analysts in the space, crypto whales just accumulated 180 million ADA tokens in a 48-hour window. But this isn't an isolated event. These same whale wallets previously scooped up 420 million ADA back in April 2025. Do the math with me here. We're talking about 600 million tokens accumulated by institutional-level players in less than a year. At current prices around 85 cents, that's over $500 million in strategic positioning. Now when I see whale accumulation patterns like this, my first question is always, what do they see that we don't? Because let me tell you something about institutional money. They don't move hundreds of millions of dollars on speculation. They have research teams, they have inside knowledge about regulatory developments, and they have access to information that retail investors like us only get weeks or months later. The timing is particularly interesting. This is textbook institutional behavior. Buy when there's fear, sell when there's greed, and the institutional interest makes perfect sense when you look at Cardano's regulatory positioning. While other major cryptocurrencies are fighting SEC battles and regulatory uncertainty, Cardano has taken a completely different approach through their proof-of-stake alliance. They're actively working with regulators, seeking clarity, and building compliance into their ecosystem from the ground up. Now let's talk about what's happening on the charts because the technical picture is getting really interesting. Crypto analyst Tom Tucker just highlighted something crucial. ADA recently recovered with a plus 9% daily move and regained triangle resistance that was lost months ago. This is significant because triangle formations in crypto are notorious for explosive breakouts once they're properly reclaimed. We've seen this pattern play out with Bitcoin, Ethereum, and other major cryptocurrencies. The question isn't if ADA will break out, it's when and how high. Tucker identified 3 critical checkpoints that will determine ADA's short-term trajectory. The first is the 91 cents breakout test, which ADA is currently trading around right now. This is the immediate resistance level that needs to hold for any sustained upward movement. The second checkpoint sits at 95 cents. This is the intermediate resistance level. If ADA can establish support above 95 cents, we're looking at a completely different market structure. This level hasn't been properly tested in months, and a clean break above it would likely trigger algorithmic buying from momentum traders. The third and most psychological barrier is the $1 level. Round numbers in cryptocurrency markets are notorious for creating massive psychological resistance, but they're also rocket fuel once broken. But the technical analysis gets even more bullish when you zoom out. AltGem Hunter, another respected analyst in the space, has outlined price targets that might sound aggressive but are based on solid technical foundations. They're predicting a surge beyond $2.68 with potential targets at $5 and even $10 if ADA can turn the $1.16 level into solid support. Now I know what you're thinking. $10 ADA sounds impossible from current levels. But remember, we're talking about a 12x move from here. Bitcoin has done 20x moves in single cycles. Ethereum has done similar multiples. When you combine strong fundamentals with institutional accumulation and technical breakouts, these moves become not just possible but probable, and the market dynamics are setting up perfectly for this kind of explosive move. Jerome Powell's recent speech sent shockwaves through all financial markets, with the total crypto market cap jumping from under $3.9 trillion to over $4.1 trillion in just hours. ADA was one of the top performers during this surge, rocketing from its daily low of 82 cents to a local peak of 94 cents. But the real game changer might be the regulatory developments that retail investors aren't paying enough attention to. Grayscale has filed for an ADA spot ETF, and current approval odds are sitting at 83%. Think about what happened to Bitcoin when the ETF was approved. Think about the institutional money that flooded into Ethereum after its ETF launch. Now imagine that same dynamic playing out with Cardano, but with the added benefit of its proof-of-stake yield generation capabilities. An ADA ETF would create multiple layers of buying pressure. First, you have the initial institutional allocation as fund managers rebalance their portfolios. Second, you have the ongoing buying pressure from retail investors who prefer ETF exposure over direct cryptocurrency holdings. Third, and most importantly, you have the staking yield component that makes ADA ETFs fundamentally more attractive than Bitcoin or Ethereum ETFs. The regulatory clarity that Cardano has been building through their compliance-focused approach is now paying dividends. While other projects are fighting regulatory battles, ADA is positioning itself as the institutional-friendly smart contract platform. This creates what economists call a self-reinforcing dynamic. Regulatory clarity attracts institutional money, which stabilizes the price floor, which attracts more institutional money. The whale accumulation we're seeing isn't random. It's strategic positioning ahead of these catalysts. Smart money knows that once the ETF approval hits, once the regulatory clarity is fully established, once the technical breakout confirms, the available supply of ADA at these levels will dry up quickly. And the staking mechanics make this even more powerful. Unlike Bitcoin, where holders can easily sell during volatile moves, ADA stakers have economic incentives to hold long-term. The staking rewards, currently yielding around 4 to 5% annually, create a natural supply reduction mechanism that becomes more powerful as more institutions participate. The convergence of these factors, whale accumulation, technical breakout patterns, ETF approval probability, regulatory clarity, and staking yield mechanics, is creating what could be the perfect setup for ADA's next major bull run. So where does this leave us? ADA is sitting at a critical juncture. The whale accumulation is real, the technical patterns are aligning, and the fundamental catalysts are building momentum. The next few weeks will be crucial. If ADA can hold above that 91 cents level and push through the 95 cents resistance, we could be looking at a rapid move toward the $1.16 level that AltGem Hunter identified as the key to unlocking those higher price targets. But remember, cryptocurrency markets are volatile and unpredictable. What looks like a sure thing today can change rapidly with new market dynamics, regulatory developments, or broader economic shifts. Make sure you're subscribed and hit the notification bell because I'll be tracking this ADA setup closely over the coming weeks. If we start seeing confirmation of these breakout levels, I'll have updated analysis and price targets for you immediately. What do you think? Are you bullish on ADA at these levels? Drop your price predictions in the comments below, and let's see who gets closest to the actual move. According to the on-chain evidence and the history of these wallets, the accumulation totals and timing are consistent with institutional-level strategy. If institutions are positioning ahead of catalysts like an ETF or regulatory clarity, the market reaction could be swift once those catalysts land. Keep an eye on the 91 cents to 95 cents corridor for early signs of confirmation. But remember, cryptocurrency investments are highly volatile and risky. You could lose some or all of your investment. Always do your own research and consult with qualified financial advisors before making investment decisions. I may hold positions in the cryptocurrencies discussed in this video. If ADA can establish support above 95 cents, algorithmic buying could amplify upward momentum. Watch volume confirmation and momentum indicators for the clearest signals. Those are the triggers that can turn a technical breakout into a parabolic move. Longer term, the targets some analysts are calling for, $2.68, $5, even $10, hinge on ADA proving support at key levels and sustained institutional demand. Those moves aren't guaranteed, but they're structurally possible under the right cascade of events. Plan risk accordingly and size positions to your risk tolerance. Key things to watch: hold 91 cents, break and hold 95 cents, and momentum continuing toward $1.16 and beyond. Look for MACD cross confirmations, rising RSI without extreme overbought, and volume sustaining the move. Use Fibonacci and historical support/resistance to map plausible retracements. Combine your technical checks with on-chain signs for the highest probability trades. Monitor large wallet behavior, repeated buys, time in market, and whether wallets move to cold storage or ETFs. Track ETF filings and regulator statements closely. Those are catalysts that institutional desks watch every day. And keep an eye on approval odds and market sentiment shifts. All of these elements align to create a higher probability scenario for a meaningful move higher. provided the key technicals hold and catalysts arrive, but always manage risk and prepare for alternative outcomes. I'll be monitoring the on-chain wallets, the chart confirmations, and regulatory updates closely. If we start to see confirmation of these breakout levels, I'll have updated analysis and price targets for you immediately. Make sure you're subscribed and hit the notification bell because I'll be tracking this ADA setup closely over the coming weeks. Now let's wrap up with the implications and the formal disclaimer. The convergence of these factors, whale accumulation, technical breakout patterns, ETF approval probability, regulatory clarity, and staking yield mechanics, is creating what could be the perfect setup for ADA's next major bull run. The next few weeks will be crucial. If ADA can hold above 91 cents and push through 95 cents, momentum toward $1.16 and beyond becomes far more likely.